The Intelligent Investor Book Summary in English. Friends, what's the first thing that comes to your mind when you hear the word stock market? Money, risk, or luck? Many people believe that the stock market is just gambling, that only the lucky ones make money. But Benjamin Graham's The Intelligent Investor proves that real success doesn't come from luck. It comes from smart and well thought out decisions. This book is often called the Bible of investing. And even Warren Buffett says, this is by far the best book ever written on investing. So today, let's learn how to become a smart investor and how Benjamin Graham's timeless principles can change the way you think about money forever. Part 1. Investor versus speculator. Benjamin Graham talks about two kinds of people, the investor and the speculator. An investor thinks long-term, studies companies, and makes informed decisions. A speculator acts on emotions, follows trends, and tries to get rich quickly. Graham says, the real investor is his own worst enemy if he lets emotion guide his decisions. Example: if a stock's price falls and you panic sell, that's speculation. If you stay calm and hold a good company you believe in, that's investing. Part 2. The story of Mr. Market. One of the most famous ideas in the book is the story of Mr. Market. Imagine you have a business partner named Mr. Market. Every day he comes to you with an offer. Today, I'll buy your shares for $100. Next day he says, I'll sell you the same shares for $70. Mr. Market is emotional, sometimes happy, sometimes depressed. Benjamin Graham says, you don't have to act on his mood swings. That means don't get carried away by the ups and downs of the market. Use the market to your advantage, but never let it control your emotions. Part 3. What is value investing? The heart of the intelligent investor is value investing. Value investing means buying stocks that are undervalued, trading below their intrinsic value. Example: if a company's real worth is $100 per share, but the market price is $70, that's your golden opportunity to buy. Graham calls this the margin of safety. It's the cushion that protects you from unexpected market swings. When you buy below true value, your risk automatically decreases. Part 4. Defensive versus enterprising investor. Graham divides investors into two categories. 1. Defensive investor focuses on safety and steady returns, diversifies investments, thinks long-term, example, index funds, blue-chip stocks. 2. Enterprising investor actively researches and analyzes companies, looks for undervalued opportunities, understands market psychology. Graham says, every investor must know which type they are. Not everyone should be enterprising. Patience, knowledge, and temperament are key. Part 5. Margin of safety. This is the most powerful principle in the entire book. Margin of safety equals protection against loss. Example: if a stock's intrinsic value is $100 and you buy it for $70, your margin of safety is $30, a buffer that guards you from potential downside. Graham says, the secret of sound investment is the margin of safety. This rule doesn't apply only to stocks, but to every major financial decision in life. Part 6. Emotional control is real intelligence. According to Graham, an intelligent investor is not someone who knows the most, but someone who can control their emotions the best. When the market crashes, don't panic. When the market soars, don't get greedy. Even Warren Buffett follows this idea. Be fearful when others are greedy, and greedy when others are fearful. Emotional balance is what separates smart investors from the rest. Part 7. Think long-term. Graham always emphasizes long-term investing. In the short term, the market is unpredictable. But in the long run, strong and well-managed companies always deliver. Example: if you consistently invest in quality stocks for 10 years, the power of compounding multiplies your wealth exponentially. Patience plus discipline equals smart investing. So friends, The intelligent investor teaches us that the stock market isn't magic. It's a test of patience, discipline, and rational thinking. Benjamin Graham says, "An intelligent investor is a realist who sells to optimists and buys from pessimists." So remember, the stock market runs on logic, not luck. Emotions destroy wealth, discipline builds it, and your margin of safety is your greatest shield against risk. Be a smart investor. Invest wisely, stay patient, and walk your path toward financial freedom.